Abdulmohsin, could I ask a question of you? I think by definition, in a family office, a lot of your clients have different objectives, one way or another. You've mentioned the 2 R's. That was a very interesting comment, and you've outlined a little bit about your approach. Have you changed, in fact, your strategic or your tactical allocations in the light of the really dramatic events we're passing through at the moment?
I think people always think of the issues after the fact. I think the role of a wealth manager is to think about these issues before they happen. So we've been very, very cash centered. From 2011, different interviews have stated that watch out, buckle up, markets are going to correct. This has been on the public TVs. And that's the role, I believe, of a true wealth manager rather than a placement power. There is tons of placement agencies in this region that sells deal after deal, but very few of them are truly wealth managers that protects client money. We follow a very standard methodology of asset allocation based on client needs of liquidity, needs of risk or risk appetite, etc. This has been digitized. Even this has been digitized, and now in 10 minutes, you can get the full proposal. You can try this on our website. And for those of you who have Saudi accounts or Saudi IBSHR, you can even do all the KYC. And very soon, we'll have the same thing in the UAE. You can do the same thing as well in our Swiss entity. So standardizing and making sure the clients get the same process, the same deals, but not standardizing the asset allocation. The asset allocation has to be personalized. The investment objective is actually personalized.
Right.
Yes, from time to time, we look at what are the future 18 months look like, where do we want to overweight, where do we underweight, and we rely heavily on our big partners that will also help us to get access to a very unique transactions. Cobank, which is the equivalent of Amazon in South Korea, is a deal that we have exited 6 times the money last year. We are investors, or our client investors in TikTok. So those are technology companies that our clients are benefiting from on the long run, but we are not going to go and cherry pick which deal. We rely on the big successful managers that have that capability and piggyback with them and focus on our end on the asset allocation and providing not only asset allocation, but also access. That's what we call the AAA.
And your strategic allocations are reasonably fixed, are they? Or have you made significant adjustments in terms of recent events?
No, we have moved away from private equity to private markets about 12 months ago, and we continue to do that. We have moved away from equity to preferred in preparation for this market downturn. So we do move away. We believe that very soon we will be going more into the liquid side because that's an area which is finally giving us a better returns than what it has been historically. We've been moving away from real estate. We've been sellers since 2013 of real estate. Look at where real estate, a lot of people sold a lot of real estate in the last 5 years. Good luck to the investors if they get 50% of their money. You have 3 things that happen against real estate. Occupancy rate are declining, cap rates is widening, and refinancing of the current debt is increased from, as we had, from 1% to 5%. So in a leveraged transaction, which most of the transactions we've seen are being marketed in this region of 60, 70%, there is no way an investor would get their equity back.
Right.
This is very important. The right R, not the wrong R, which I've stated earlier.